Daryl, thanks for joining me today. I'm looking forward to our conversation about what subscription companies don't know about the payments ecosystem that could certainly hurt them and their relationships with their customers. So thanks for making the time.
Oh, thrilled to be here with you, Karen. Thank you so much.
So what don't they know?
I think one of the key things, payments is one of those things where we just kind of forget about it. It's in the background. We want to think more about go-to-market, product market fit, our marketing strategy. But the payment rails that we're running on, especially in North America, they really haven't been updated in a meaningful way since 1987. And they're required to make like these nanosecond decisions on billions of transactions. It's a really complex problem. And this has really been made worse with some of the recent stressors that we've seen in COVID. In fact, there's been 5 really significant stressors that have come out in the last year or two. The first is an explosion of purchase transactions from digital devices.
Yep.
New types of transactions that came out because of the gig economy that just didn't exist a few years ago. Dramatic shift from physical to e-commerce. I mean, look, Visa's got projections on how transactions move from face-to-face, brick and mortar to e-com, and 5 years worth of projections happened in 2020. And there's not going to be any reversion to the mean. There's also been a real acceleration of recurring billing services because customers are really getting used to the convenience of regular product and service delivery. And then, of course, you get the fraudsters. They're more sophisticated than ever before, and they kind of data breaches in the way that they process transactions. So you have all these things coming together, and you get these incredible stresses on the payment authorization systems, growing fraud costs. The banks lost $30 billion to fraud losses in 2019. This is even before COVID. And yet false declines are over $400 billion in that same year. So the banks, because they have these fraud losses and they have these antiquated systems and they have all these stressors that are really kind of exacerbating the problem, they've kind of shifted liability kind of behind the scenes inside of the payment ecosystem over onto the merchant, saying, well, we can't stomach these fraud losses on our P&L. So we're just going to end up declining more transactions. And we have all these false declines, which is about 2/3 of all the declines that we see, failed payments in the existing payment ecosystem, are actually false declines, which is quite staggering. So it can be a really significant problem for all of the merchants out there who are selling subscription services or anything really in card not present.
So you talk about false declines, but you talk about them in a different way. You talk about them as bad declines. So what makes a decline? Well, they're all bad, but what in particular are you referring to when you talk about a bad decline?
So look, we all want fraud out of the ecosystem, right? Cyber thieves and hackers, if they have a database of stolen credit cards in 2021, they're not going to make physical cards and take them into a Macy's, right? They're going to be running them online. Those are the kinds of declines that we want. We want 100% of fraud to be declined, but we want 100% of legitimate transactions to be approved. And that's the problem. If we had a proper functioning system with better trust and transparency, we would see more of these legitimate transactions being approved. But unfortunately, they're not. This is the $400 billion number. These are transactions that might look a little bit sketchy, but they're actually legitimate transactions from customers that want to transact with a merchant. And this system is kind of getting in the way, which has led to a new category that we really need to be aware of, which is payment authorization management, or PAM for short. PAM solutions are third-party applications that sit outside of the payment ecosystem that apply technology, expertise, data, processes to improve the accuracy of the existing payment authorization systems. And it's kind of insane to think, Karen, that we need these systems, but because of the problem and because of the challenges inherent to the legacy systems that are running transactions right now, we've seen the emergence of this new category of PAM services, payment authorization management solutions.
But when it comes to a subscription service, so I've been onboarded, I've established my payment credentials. I know that I am going to be charged whatever that monthly payment is every single month. What can go wrong?
Well, a lot of times it's what just happened prior to the subscription transaction that's going to impact the risk profile of that transaction. Banks have variants, they have tolerances of what kind of risk they're going to take, and they have certain pockets of window of time where that resets every once in a while. So your subscription service to your favorite, Netflix or Spotify, or maybe even just your car insurance, just based on the timing of when the transaction is going through, unbeknownst to you, all of a sudden it can just tip over the threshold of risk on the risk scoring systems that the banks have to all of a sudden now be rejected. And it's like, you've been transacting, obviously the longer you're transacting with the subscription service, the higher the likelihood the transactions will continue to be approved in the future. But I mean, we have subscription services that we see that, month 15, all of a sudden the customers have been paying regularly for 14 consecutive months. Month 15, it fails. They retry it a few times, it goes through, and then the customer continues to pay off for the next 5-6 months with no further problems. What happened there on month 15? Well, that's where we see the squishiness of these risk systems that are kind of interceding and trying to analyze each transaction in real time, in milliseconds, as to what it is they're going to do. And they unfortunately get it wrong sometimes.
Interestingly, that just happened to me. So I was, this is for a fitness subscription. And I've been paying for it for probably 15 months, actually, because it was around the time of the pandemic.
Yeah,
and all
exactly.
of a sudden, I get an email from the from the fitness provider that said, your card could not be processed. So I didn't understand why, because the card had always been had been fine, and there was no legitimate reason that I could tell. I went in, looked at my card, no issue, no lost or stolen, same card, no issue with with credit limit or anything like that. So it was a puzzle, and then it went through. So
you've seen firsthand exactly what's happening.
So unpack that.
Yeah, so look, each transaction that runs through in card not present, which includes recurring subscriptions, gets stamped with a 3-digit risk score. And there's actually multiple services out there that are trying to score transactions in real time on behalf of issuers, which again, you got to remember, they have an incentive to improve as many transactions as they can, because that's the only way they make money, and they want to keep you happy as a customer as well, right? They don't want you calling the bank and complaining about cards declining, because there's really good data that customers that end up with declining transactions are less likely to use that card in the future, because it's embarrassing and it's frustrating. And so the card ends up going back of wallet. But unfortunately, what happens is they have this larger incentive sometimes, a conflicting and competing incentive to reduce fraud losses. Fraud on their P&L is a significant line item, and it also has consequences to the issuing bank, and that it can affect their insurance premiums, for example, if they tip over a certain threshold of fraud losses. And because of all these stressors that we talked about, these new stressors where there's just so much more volume of card not present, it's a bigger issue. And so they're trying to fine tune these systems, but a lot of times the only thing they can do if they need to reduce their fraud losses in a given month or quarter is just reject more transactions.
Wow.
And so this is what's happening. You get these transactions and say there's a 3-digit risk score that's about here, and they set their threshold at here, but then they have to move their threshold down because of certain situations that they're in, or maybe the overall riskiness of your account has been slightly higher because of certain transactions you've processed through. So it's very fluid and dynamic. And we end up with like all these upset people. You got merchants who are upset. You have cardholders like you who are upset. I mean, think about it from the merchant's perspective. They don't want to lose you as a customer.
Right.
And it's bad on their brand now, because you're having to deal with them and customer service. And why did this even happen? And it's just bad for everybody.
I mean, in conversations that we've had before about this, you also talk about, other things that are just completely disconnected with the transaction, but it's when the transaction was presented for processing, and the batches of transactions that, would alert some sort of, flag or trip some sort of flag. I mean, are there things like that? I mean, that seem to be, inherently fixable.
Absolutely. I mean, there are lots of things about these risk systems that we just can't control as merchants and as customers, but there are some things that we can control. And this is where this new category of PAM comes in, where we're really looking at what can we control, what are the controllables that we can control, and are we doing the best possible job to do that, right? Timing of the transaction. When are we processing our subscriptions during the day? What merchant bank are we using, and what merchant category code are we in? Do we have all of our data fields just right? Because that's also going to impact the risk profile and the score of that transaction. Should we be processing with ZIP+4 or without ZIP+4? Are we flagging this transaction as an installment transaction or a recurring transaction? or sending it with a plain vanilla flag. There's all these different things that if we get deep down into the weeds, that are all kind of encompassed in this new category that's been emerging of payment authorization management that really yield massive ROI to subscription merchants.
So if I'm a subscription merchant and I'm trying to sort this out, and I'm trying to measure, the false, I'm trying to parse out the false declines and trying to figure out how to fix the problems that are somewhat inherently fixable. What sort of metrics or benchmarks should I be using, and what kind of, how do I deploy the kind of technology that you're talking about?
Sure. Well, it depends on scale too, right? Like I'm a fan of saying that percentages don't pay bills, dollars pay bills, right? So a lot of times a merchant, when they're just getting started, they're just looking for a good enough solution. So there's some rules-based systems out there that can take your failed transactions as a subscription merchant, recycle them a few times, maybe send some text messages and emails, and that might recover on average 20 to 25%, maybe even 30% of your total declines. And that might be enough to recovery on your failed payments in the early stages of your business. But as your business starts to grow and you've built the machine, if you only have $2,000 a month of failed payments, you might say, well, a good enough solution is fine. But if you had $1 million a month of failed payments, now you really need to make sure you have the best solution. And that's where you see these agnostic third-party players come in outside of the payment ecosystem, kind of bolting in with their technology. For example, what we built at FlexPay, which we built for ourselves because we had this problem so much as merchants, right? With a simple API connectivity that can plug in and analyze transactions and repackage them in a way so that they get the best possible risk score on the legitimate transactions, that is. And we're constantly analyzing which ones are legitimate, which ones are more likely to be fraud, so that we overall keep the reputation of the merchant account in proper good order with the issuers, getting the fraud out of the ecosystem, but ultimately getting a lot more of those legitimate transactions approved. And I think that's really what we need to do. You can only do so much internally as a merchant yourself. There's certain low-hanging fruit things that you can do that we talked about, but ultimately, as you want to get, the riches are in the niches, as we say, right? And if you want to get deep into this niche, you're going to need a third-party solution, and there's a few out there.
What is a reasonable recovery rate, as we've been talking about it?
It's challenging because it really varies. I mean, we see some merchants who, the first time I saw a merchant that had like a 17% recovery rate on their failed payments, I nearly had a heart attack, but they were thrilled because it turns out that a huge cohort of their members are using one-time only loadable prepaid cards. So once those are out, like good luck in getting more revenue out of that, right? And their baseline was only a 6% recovery. So for them to go from 6 to 17, they were thrilled. Whereas we have other merchants that are in very low risk categories, charitable organizations who run subscriptions for donations being contributed every month from some of their donors. We'll see as high as a 73, 78% recovery with them. So it really varies all over the place, depending on the demographic, your price point, the reputation of your merchant account and of your business with the issuers. But I would say if you just kind of want to take a broad stroke, blunt instrument approach to it, you should really be looking at somewhere between 46 and 53% recovery on failed payments. That's a pretty good benchmark. But again, it really depends on so many of the factors specific to your business.
What's interesting about what you just said is that on my particular card that I use for certain subscriptions, there were other subscriptions that had no problem. But that particular month, there was just this one fitness related app, $19.99. I mean, it was.
And so what happens is sometimes a fitness merchant, like a given subscription merchant, gets hit with a fraud ring. And we've actually tracked this. We receive data directly from the issuers where they show us how they're scoring merchants. We had this one particular merchant that got hit by a fraud ring. And guess what? The risk profile of all their transactions, the 3-digit risk score on all of their transactions went up dramatically. And their false declines, they just knew it as their decline rate. Like, what in the world just happened to our business? Our failed payments are skyrocketing. And we were able to validate with them that because they got hit by this fraud ring, now a whole bunch of their good transactions that had been going through seamlessly for several months were now being rejected. And it was creating all this chaos with their subscribers. It was damaging to their brand. They're getting all this churn. And look, for any given merchant in subscription, about 48%, that's the industry average, 48% of your churn is coming from failed payments. It's just under half. Like, they really need to focus. If you care about churn, which obviously you must as a subscription merchant, you've really got to be looking at this component of it, of what's my payment failure rate, right? But it could have been that health provider that you're working with in your example got hit by a fraud ring. And now all of a sudden, all transactions coming from that particular merchant is deemed as risky. And unfortunately, the fraud systems are quick to react to new risks and very slow to kind of revert back to the mean and start saying that this merchant, okay, they've kind of cleaned up their problem. In fact, we've tracked this with our issuing partners who share with us the risk scores by merchant. We can see that within 15 days, we can see a massive spike in risk scores, and it can take up to 6 months before that reverts back to where it was before.
So what should these subscription commerce companies do? I mean, there's obviously the technology that you described, but do you think their expectations are too low in terms of what they can recover?
I think so. I think that there's unfortunately just not enough focus on this because, again, most merchants are just focused on how can we go after, like, how can we acquire more customers? How can we drive down our cost of acquisition? And I think the savvy, sophisticated merchants, they look at cost of acquisition as a percentage of overall revenue. And the irony is, if you can actually generate a higher lifetime value, generate more revenue per 1,000 customers that you bring in, you've automatically increased your acquisition budget, again, as a percentage of revenue, which allows you to compete as it becomes a competitive differentiator in your ability to attract more business. It actually becomes a virtuous feedback loop cycle of helping the business and creates this exponential lift to the business. And so I wish more merchants would focus on what can we do to retain the customers that we already have. It's much faster to the money. If you look at marketing budget and what you spend, it can be several months before you get through your payback period. But the customers you already have, if you can layer in a better solution to recover those transactions, that's instant revenue straight to the bottom line. But also it's better for the brand, much happier, more satisfied customers. You get the future downstream revenue. So I wish there was more focus, but unfortunately what we see in talking to a lot of merchants, they're much more prone to focus on how can I do better marketing? How can I attract more customers? How can I drive down my acquisition costs? Than they are, how can I generate more revenue from the customers I already have?
It's interesting. I mean, you're right, because when we look at the subscription commerce space and look at the way that merchants are adding features and functions to not just acquire new customers, but also to retain them. It is all about free trials and shipping cost and things that are related to features, functions. And this doesn't necessarily resonate, but now it will, because we just said it should.
Yeah, and look, the reality is, because of all these new stressors that have come in to the payments ecosystem, I think that this problem is sort of percolating to the top of the list for more and more subscription merchants. The pain is getting real. Like, when we first started as a merchant ourselves, we were losing 13% of all of our fresh transactions to declines. And by the time we get out of that business, 15 years later, it was as high as 20%.
Wow.
And we see plenty of merchants right now on their annual rebilling subscriptions they're in that low 20% declines. I mean, this is just too big of a problem to ignore now, which is why we see the emergence of this new category of PAM, payment authorization management, and the different solutions out there in order to mitigate against some of these stressors.
Make PAM your friend.
Yes, exactly. If you want to have a successful business that's thriving, I think we have no choice. It's just the reality, unfortunately, of the world that we live in today.
Well, it also seems like it's a no-brainer. It sounds so cliche, but if there's an opportunity to identify, what can be a fixable solution, a fixable problem, and a solution to address it, what's the risk? I mean, the risk is not doing it.
Yeah, the real challenge, one of the biggest challenges that I'm really on a mission to solve is there's not enough trust and transparency in the existing payments ecosystem. And everybody wins if we have more trust and transparency. We got to pull back the kimono and explain to merchants what's actually going on, why these things are happening. What are the motivations of the other players in the ecosystem that are stakeholders in these decisions? And once we understand better what everybody's incentives and issues are, and we create more data sharing and trust and transparency, I think ultimately the entire economy gets to benefit as a result.
I would agree with that. So Daryl, thank you so much for a great conversation and for such great insights. Remember, PAM, payment authorization.
You got it. Thanks so much, Karen. Really enjoyed this.
Thank you. Bye-bye now.